Welcome everyone to another episode of Financial 15. Kevin and I are ready to go. Lots of great information today. We're talking about a recession, specifically looking at what is a recession, what is the impact of recession. Lots of great information. You definitely want to stick around.
Yes, today's topic is the word on everybody's mind, the big R word. And are we in recession? What is recession? The whole 9 yards. Now, if you want to find this video or any others that we've had beforehand producing, please go to our YouTube channel and subscribe. Lots of great content there. You'll find out about recession, interest rates, the whole 9 yards with this. Also, please visit or like us on Facebook, and especially visit our website at beckerorr.com. There is a lot of stuff there, videos, blogs, the whole bit, and you'll really be enjoyed with what you see. But today, we are talking about recession. It's been on everybody's mind. Every news source is mentioning it. Clint, how do we define a recession? And basically, what is a recession?
Yeah, well, we have to go through that. Before we get too deep in, we should mention this is going to be a two-parter. So I'm going to talk about what is a recession, go through some details, and then another video will talk about the impact of recession when it comes to the markets, comes to the investments, which as I say that, I should probably say normally keep the to be continued to the end of the video. We're kind of putting it at the beginning of the video, but whatever. We'll start with part one, looking at what the definition of recession is. I'll pull this up for you here, Kevin. This is probably dictionary definition of recession, probably one people are familiar with. What are we talking about?
Yeah, basically, I mean, the standard definition that everybody knows is that you've had basically 2 negative quarters of GDP. As it says here below, temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. That is the general definition that most of us know as a recession. So if you've had 2 negative quarters in a row, you're in recession. That's been an automatic since day one. But again, that is basically the dictionary textbook definition of it. But is that reality? Is that what recession is?
Yeah, that's where it gets a little complicated. Recessions aren't exactly easy to define. Economies are more than just GDP. There's lots going on in an economy. And then you have to determine who decides whether or not we're in a recession, right? You don't want to leave that up to the politicians. Because what politician is going to say they're in recession when they're in charge?
Exactly.
So you have different arbiters. In the US, you have the National Bureau of Economic Research. They're kind of the official arbiter to determine when they are and aren't in a recession. In Canada, you have the CD Howe Business Cycle Council that fills a similar role. And they have these long-winded definitions we have on the screen there. I think a key takeaway, as opposed to just reading all the jargon, a key takeaway, they don't use that 2 successive quarters of negative GDP.
No.
They've got a whole range of other criteria. They're looking at the general economic activity, and they're looking at 3 criteria specifically, both of them. They use different words, but it's kind of the same thing. In the US, you're looking at 3 criteria: the depth, diffusion, and duration of the slowdown in economic activity. In Canada, the CD Howe Institute, they have amplitude, duration, and scope, which is pretty much the same thing.
Same thing.
So they have different criteria that they look at. So it's saying, all right, we're not going to look at GDP and say, did GDP go down? Economies are broader than that. They're more complex than that. So we're going to look at a range of criteria and see if you have a broader decline that impacts more of the economy for a more significant part of time. And then we'll call that a recession. So it's a little more technical of a definition than simply looking at 2 quarters of GDP.
Yeah, and that's exactly what you've got there. And you have to have those sort of definitions put out there so you can get the criteria that's needed for recession. But again, the basics, I guess we want to make sure and expressing is it is an economic slowdown that's going on, whether it's in one country or it's a global scenario. It's economic slowdown that will lead to recession. But how you define that, is it a month? Is it 6 months? Is it 3 years? Those are big questions that need to be answered as to what we think the recession is and how long we think the recession will be pronounced.
Yeah, and a couple of examples here. So this is the CD Howe Institute, the Business Council Cycle, a Business Cycle Council there. Canadian recession. So this is what they've determined are Canadian recessions. You can see the list there. March 2020 and April 2020. That's got to be the shortest recession on the books, about a month. You can see the larger one there, October 2008 to May 2009. You can see they don't give specific dates. They don't say, all right, October 3rd, the recession starts. They kind of do it as a month. So, all right, October, the data seemed to be declining. We're going to say that was the kind of the peak of the prior cycle, the beginning of the contraction. So they don't have it down to a date. They're looking at general ranges. Important to note here, early 2000s, remember the dot-com bubble, everything imploded. Canadian economy, technically not in a recession.
Yeah, that would be something to see, even though we've seen things happen on that time frame. You're right. I mean, because being very limited in that tech space, Canada sort of averted that whole thing. And again, as we look at the standard definition of 2 quarters, 2 quarters would basically be 6 months. But as we can see on that first number up top, it lasted 2 months. So it's definitely not that 2 quarter scenario that goes on. So we need these clear definitions to let people know what it is.
And on the other side of that, remember in 2015, oil prices took a kicking, and technically we had 6 months. We had 2 quarters of negative GDP, but according to CD Howe and their more in-depth criteria, no recession. It's not even on the list here. But I remember that because it's the middle of a political cycle and election, and politicians were all over that, regardless of what the CD Howe said. But that's a whole other topic. We'll look at the U.S. recessions here, Kevin. This is done in chart form instead of a table to give you kind of representation. What's on the screen is GDP. Again, that's not the only criteria, but just to give you an idea of why they use so many different criteria. You've got the GDP in the U.S., and then the shaded zones are the official recessions done by the National Bureau of Economic Research, NBER.
Yeah, and again, what we can see here is sort of that a variety of different things. You see that there's basically somewhat of a decline in those lines every time it gets to the gray shaded area. Some of them, though, are fairly flat. And that's the other factor. I mean, if we look at just after 2000, it doesn't look like that shaded area is really going down much for quarterly gross domestic product at all. But again, I mean, some of the other things that people get a little worried about is, oh no, you're in recession. How's this going to affect everything? If we take a look, the gray shaded spaces are very thin compared to all the white out there. And the white is when the market goes back into expansion and things along those lines. And theoretically speaking, you can have a few that come up upon one another. The 70s, all of a sudden 73 has one. All of a sudden you have one at 80, you have one at 82, but then you get a 10-year stretch. Same sort of thing. You have one just after 90, then you get another 10-year stretch. So they can't come on top. And I think if you hadn't had the pandemic, we may be in this recession, which, would have had more of a 12-year stretch before anything goes on.
Yeah, and they did have a recession in early 2000. I mentioned the prior slide, Canada technically did not. They did, but as you mentioned, the GDP line, their economy was still likely moving forward. And then in 2015, neither country did, even with the oil drop. And you can see in the 70s, they had longer periods of recession in the U.S. than we did in Canada. Officially, I think Canada only had one, and they had 2 recessions in that decade. So little nuanced differences there between Canada and the U.S. But we have to get to this question because on the chart here, it makes it look as if people know we're in a recession when the recession happens.
That's
right. This is all done after the fact, right? We have the data after the fact. Then we can go back and adjust the charts, adjust the tables. While we're going through it, we don't actually know. They wait until they have all the data, and then they make the assessment. And that'll make for some interesting details here, Kevin. I'll do a few quick examples. I'll hit you first with a Canadian example. And granted, the pandemic, I appreciate lots of differences. You had a big, sharp decline. They lock everything down, then they open it back up. But on May 1st, this is from CD Howe. This is the actual little blurb, the actual announcement that comes up. May 1st, they say, hey, by the way, in March, we are in a recession, which I don't know who went through that period of a pandemic where they lock everything and didn't think we were in a recession, but it was nice to get the confirmation 2 months later, May 1st. And then I'll give you the other side of it here. Fast forward to August 24th, this comes out, and they said, we've determined that April was the end of recession. So in May, when they made the announcement of the start of the recession, the end of the recession had already happened.
Well, exactly. And I mean, that's the biggest factor is that by the time any of these announcements get put out there, you're already either in the midst of it, you're at the beginning of it, or you're coming completely out of it by the time the announcement comes that we've had recession. And that's the biggest definition that everybody seems to know. I mean, right now, all the talk is out there. It says, recession's coming, recession's coming, recession's coming. Chances are, if recession's coming, we're in recession. And we may have been in recession for 3 months now or longer, as these US numbers say. Like, I mean, we go back to November 26th of 01. The announcement comes that March 21, the business cycle peaked. We'd hit recession. And then almost 2 years later, they announced, oh, by the way, November 21, that was the end of it. So when we were announcing that we had hit recession in 01, we were actually coming out of recession in 01 in the US. Same sort of thing goes on. I mean, in December of 08, they announced that December of 2007, that's when the business cycle peaked and we were in recession. Well, if you didn't realize by the end of December of 08 that we were in recession, there was a big problem there. And of course, they wait until 2 years later again, and they'll announce that, oh, by the way, in June, it ended the year before. So again, all the timing is delayed. And that's the way we've always seen recession beforehand. So theoretically right now, if we are talking about being in recession, we could easily be in recession now. We could have been in recession since March of this year. And technically, until those definitions come out and they're announced, we don't really know it. And a lot of times, as we've seen, by the time the announcement comes that we're in recession, we're already pulling out of recession because things have seen it that way. So again, what the recession is basically those sort of definitions. But knowing how this is announced is another important factor for people going forward.
Yeah, and we'll get more into that in the next video where we talk about how it impacts the market. And that timing piece is crucial for how it impacts the market. Because the market reacts earlier, of course, and then we get the actual official announcement down the road. But that'll be the next video, video number 2 in our series. This is probably where I should have saved the to be continued instead of putting it up front. But nonetheless, if you have any more questions on recession, economics, finance, whatever it is, get a hold of us, chat with ClintonandKevin.com. We'd certainly be happy to help out. Love to hear from you. Anything you want to tell the folks as we part here, Kevin?
No, I just say stay tuned. Part 2 of recession is going to be very important for you as it affects the market, and everybody wants to know how that plays. So tune in for our next one. The Financial 15 will be a wonderful recession in the markets. We can go from there.
Take care.